Okay guys, that time of the week again. I'm going to be updating my Vanguard, see where we are with the way that I invest. And I'm going to show you the pots and I'm going to kind of give you a little bit of clarification as to how I get there. Now, what you got to remember is I'm not a financial advisor and I trade my own way as I do for my own living, which I've done for 20 years and I do okay with it, okay? Vanguard, again, it's something that I do. This was an inception that I did for the guys a long time ago. The fund started a few years ago with very little, and it's now sitting at, well, quite a sizable amount, as you will see. So when you see the comment, you'll kind of excuse me why I might ignore it. So I do implore you to comment on everything, because you should, but here we are. So it's Tom, little salute to you. The first thing I'll say is, you ran my portfolio through Gemini. The classic financial advice, AI. AI isn't exactly the be all and end all. I have it for a certain reason. This is by holding all three, I'm not adding diversification. I'm just adding overweight on North America mega caps. Is that so? Well, let's have a little look, shall we? I agree. It's mainly to America. And there's a very good reason for that. I watched markets for a very long period of time, as you know. There is the S&P 500. It's constantly performing. Even when it has its downturn, it ain't that bad. And genuinely, over the last 30 odd years, the S&P 500 has produced somewhere between 9 and 11% yearly, consistently. So of course you're going to look at the best economy. So that's the first thing that I would look at. Now I went through everything, and my main thing that I check is I want a steady Eddie global all cap. Now I picked on the FTSE global all cap because it's got 7,000 products in. I'll show you that. And then the other two were basically down on cost. So the cheapest one is the ASG here. But look at its yearly return. It doesn't really bring much. The next cheapest in that bunch, because I did want a cheap all cap, was here. And it's producing, on average, a decent return. In fact, over the course of 3 years and one thing and another, when you start averaging things out, it's hitting good numbers. So I wanted something that was between 11 and 20%. I'm more than happy with that pullback after costs and one thing and another. It fitted the criteria. And it was the same with the V3, okay? I just wanted a cheap fund. But let's delve into them a little bit deeper. So first of all, we have the all cap. This is a global fund. So yeah, it's weighted into America, but most funds are. Its price is fine. It has 7,493 sort of assets within it. So there is a big spread. It's a case of buy the haystack, not the needle. Now, price and performance, it does incredibly well. Okay, it's got a good arc at the moment, so there's no reason to rebalance this at all. If we go down into portfolio data, so you can see it, all right, it's spread 65%, but that's 35% across the rest of the other markets. Now, Europe, Pacific, emerging markets, etc., they're all pretty flat at the moment. If you've been watching Eurodollar, you'll have seen right across this summer, it's hardly moved anywhere. The things that are moving is North America. So again, rebalancing is correct. Now, when it comes down into other markets that I look at, where are we at? Just get myself on one of the other pages. We can look at this. Again, it's across the board, but it's dirt cheap. It is really cheap. So therefore, it doesn't have to move the dial much in order to get moving. And I've got a decent portfolio. I want emerging markets in it. I want Europe in it. So it suits me quite well for what I'm after. Now, what else have we got? So we've got the global, and then you've got the North American one. Okay, again, this one, it's got reasonable amount of stocks in it. There's a clue in the name, North America. Of course, it's going to be weighted to the North America, but it's cheap. I started buying into this when it was down in the low £5, so it's doing very well, and it was on purpose because it's cheap. Because when you look at my funds, if I take them over and I pull this onto the globals, it's broken up into little areas. Now this thing here started with just 25 quid a month to see if you can take a small fund and build it up gradually with little money. You haven't got a hope in hell of trying to trade the FTSE all cap on here because you couldn't afford it. But the North American all cap, it's got a high percentage return year on year. It was low value to go into it, so therefore the costs could be controlled, and it is steadily growing. It has grown phenomenally well this year because I only started it this year. I'll show you it on the spreadsheet in just a second. So its performance is incredibly well. In fact, there it is there. So boom, 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 up it goes. All right. There's not a bank in the land would have paid that. Take this over into, say, Quick Fund. This is just cash that I like to keep around. Again, we can look at the holdings. It's the V3AB. I'm still sticking with the FTSE all cap. I've got no reason to change that. And I just wanted a cheap variable that I can put little bits of money into. So I stuck on that one. Performance of that fund, there you go. It's doing quite well, outperforming any bank. So again, rebalancing is not a problem. Taxation, again, is not an issue. I've got a very good accountant who sorts things out for me. Next part of it, there's the ISA. Again, I put money into there. Holdings, I keep it the same way. V3 and the all cap, doing quite well, so they can run in tandem. No problem there. It's doing really well. And then when I've got the ISA filled up, because you only allow 20 grand, I drop over into the pension and I take advantage of the tax situation there. And again, if we sort of look at the last year or so, it's doing very well. Happy days. And if we look at the holdings, I keep it just the same. So for me, I'm very happy with this. And would I trust AI with my financials? Not in your Nelly. Would I trust myself? Well, after 20 years of doing the job, yeah, I think I would. So I'm okay with this. And having had a meeting with my accountant yesterday, he paid for lunch. It was good news. In other words, everything's going in the right direction. So I do track things. And I track things on this, as you were saying. So I'll look for what the cheapest stock is, work it down, go across. As long as I'm within my tolerances, fine. Cost is a factor. Doesn't have to move the dial much to make that better. This is how I pick things out. The V3 was the same. My FTSE all cap was based on the fact that it is an all cap and it's across the board. It also has one of the biggest shareholdings in it. So therefore it will smooth out. Simple. Okay. You've also got to use common sense. All right. That's it. So everything's there. Then I track it down into the fund. For those who've never seen this before, that's when the fund started. So the fund started in 2022 and I've just drip fed into it off my trades to build this up, which is there, and it's doing okay. So from the last data sample check, it's gone up another % since the 7th of August, so I'm quite happy with that. It's made 2.5 grand's worth of profit, which has clawed back what it was losing before. So I'll be resetting this today So the way I do that is I just reset it today. Put in whatever the figure is. So it's 241,721.45. That's what the view is today. Oh, bollocks. Just need to put a couple of numbers in first. So it grew last 2434.81, and it's up 1%, and then we reset it at 241,721.45. So the next time I look at it, it'll tell me whether it's up, down, and on the last check, it was up 2.5. Okay, so that's what I do. I'm way ahead of where I want it to be. I wanted to end this particular year on 200,000. At the moment, we're 241. So things can change. It did do that last year. Last year changed dramatically. We were at target, and then we had a few news announcements that rocked the market backwards, and we lost a bit. And I ended up not hitting target. So this year, I'm well ahead of it. It's dead simple, guys. I don't need to rebalance it because it'll do it itself. The costs on the smaller sort of products, they'll look after themselves as well. The chances of it going down sort of 50% on £6 is pretty slim. Might go down to 450 and then rebound back to 7. I'll weather that. That's it. When it comes to doing your investing, always look at the big picture first, but look what you're trying to achieve. I'm trying to achieve something over the course of the next 10 years. I'm fully aware of the taxations and capital gains. I'm fully aware of the balance that is inside of that. And it suits my needs. Now, at the moment, there's the big talk all the time about there's going to be a big market correction. There's going to be the AI bubble burst. Well, they've been talking about that for 4 years. You know, look at the DAX. It's one of my primary markets that I trade for a living. When it hit 15,000, they said it would never go up another 10%. It's almost doubled it. You know, the S&P 500, they said it would bottom out and it would correct. No. There is a war going on between old money and new money. Now, new money is technology-based, whether that's AI, robotics, whatever. It's fine. You know, it's there. It's here to stay. The AI bubble, as they call it for the burst, is not going to be as severe, in my opinion. And I say my opinion because I'm not an advisor and it's just the way that I see the world. They are quoting the dot-com bubble. They are two different scenarios. In the dot-com bubble, if you had a website, johnsmith.com, and you sold sheds, who gives a fuck about sheds? Nobody. So it's not the dot-com that went bust. It was the business that had the dot-com website that went bust. It was a fragile industry. So therefore, down it went. It wasn't ingrained in our life. Now, the AI bubble is ingrained in our life. Everything is part of what we do. You ring up to pay an electric bill, the chances are you talk to an AI bot. So that is actually part of our life structure now. So the chances of it going bust is pretty darn slim. It's a bit like people sort of say Facebook will never survive and one thing another, or they used to when it first came around. Well, it survived the battle, and now it's ingrained in your life. Every business has a Facebook page. Everybody speaks on Facebook. You've now got TikTok coming in and all these other little platforms, and they're AI driven. So the AI bubble is not going to be as bad as you think. But one of the reasons why I like the idea of the smaller caps and keep half an eye on emerging markets is because AI will drive them. Why? Because they're going to need water, they're going to need cooling, they're going to need land, all these different things, data centers. All becomes investment. And investments come back to the stock market and it'll keep it going up. They are designed to continually rise. It's part of the Magnificent Seven. If you look at the Magnificent Seven, it has changed over the sort of decades. If you went back to when I used to look at these sort of things, it was bricks and mortar. It was FedEx, Coca-Cola, these sort of things. Now, it's Meta. It's Google, Amazon, tech-based. So the world has shifted. And whether we like it or not, the Magnificent Seven holds 39 to 40% of the stock market. So you'd be foolish not to invest and look at them. That's my opinion. I'm sticking with it. I'm happy with it. Taxman is happy with what I do. And my accountant yesterday was also happy with the growth. So, Scruff's happy boy. But keep them coming. Disagree with me. That's what debate is all about. It's a wonderful thing. But always, always follow your own instincts. Never follow somebody else's. Not even mine. What I do suits me as a person. What you do mightn't. It will suit you as a person. Yeah, I could be very risk averse. You could not be. So therefore, I wouldn't put my money in a savings account that has 1%. I would take the money and I would make it work for myself by either trading it personally or investing it personally. That's it. We're all human. And the beautiful thing about the human race is we're all different. So as always, guys, live your best life.